The local bourse faces mixed Asian markets this morning, but the major bourses that were taking losses were down more than 1%, with all eyes on U.S. non-farm payrolls numbers later. The rand is weaker in early trade as concerns about rising coronavirus infections and fresh lockdowns subdued risk appetite globally. For an update on the latest market moves, we're now joined by Bianca Botes, Executive Director at Citadel Global. Bianca, always a pleasure having you on the show. The rand is weak in early trade, having slipped by 1.24% yesterday. Talk us through some of the factors driving the rand's moves and what the current slump is about.
Good morning, both. Basically, what we are seeing is we're actually seeing very robust numbers coming out of the U.S. in terms of economic growth as well as their labor market. And we are well aware that the Fed has made mention that they will only start looking at reviewing monetary policy once we see the labor market show continuous and sustainable improvement. It seems like we are now reaching that point. We are also seeing a bit of concerns regarding the new Delta virus strain, with even Europe talking about potential fresh lockdowns as this virus continues to spread, and even in South Africa bringing us back to a lockdown level 4. So definitely diminishing the risk appetite there, and we are seeing the dollar index improve quite significantly.
And in early trade, gold, platinum, as well as Brent crude oil were higher. Take us through some of those developments on that end.
So interestingly enough, gold has shed just over 7% in June. We have seen it pick up some of that lost ground during trade yesterday and today. However, it remains subdued against the dollar. When we start looking at oil prices, yesterday we saw the OPEC meeting be postponed to today. And that is basically as a result of a stalemate between the members of OPEC as they can't reach an agreement as to the increase in supply. OPEC is looking to increase supply by 400,000 barrels per day. And should that not be reached, we can actually continue seeing a deficit in supply and increases in oil prices throughout the rest of the year.
All eyes are on U.S. non-farm payroll numbers, which are out later. The expectations are that employers added 700,000 jobs in June, with the recovery of the U.S. labor market and future monetary policy having been the key drivers of activity so far this year. What are your sentiments around that?
So today's data is definitely very important when we start looking at non-farm payrolls. As I mentioned earlier, with initial jobless claims, we actually saw those numbers come in quite significantly better than markets initially expected. And as the labor market in the U.S. continues to improve, we'll actually see a rise in inflation and subsequently also see the Fed take action in terms of monetary policy. So we will be keeping an eye on the Fed, making sure that they are actually going to eventually start tapering down on quantitative easing, so those asset purchases, but also look at the interest rate projections and whether they will stick to the timeline currently given through or even move that up further like we saw them do during last month's FOMC meeting.
And very lastly, in light of the recent power interruptions and move to level 4, what impact will these elements have on South Africa's economic recovery drive?
South Africa's economy remains a massive point of concern. We do continue to see an increase in virus infections. We do continue to see lockdowns throughout winter. And that coupled with electricity supply issues could see the South African economy come under even more strain. So definitely keeping an eye on that. It will definitely impact negatively on the South African economy. And hopefully we can see some form of decrease in these numbers so that we can start opening up the businesses and the industries that are currently shut. Unfortunately, when it comes to the load shedding issue, we've been made well aware that it will be with us for the foreseeable future. And that is something that the South African market will have to adjust themselves to, but also find a workaround. So two very, very important areas in terms of economic growth to keep an eye on.
Very well. Let's leave it there for now. Thank you so much for your time, bringing us up to speed with the latest business news. Bianca Botes, they're giving us a sense of some of the expectations.